Good morning. Good morning. My name is Bobby Holman, and I am the Vice President of Tri-County Regional Black Chamber of Commerce's Region 2, Galveston County. And we are back at our Let's Talk Business podcast. And you guys know what I always say. We have some exciting guests for you today. And I always say that because we do. We do have some very exciting guests. And I would first like to thank our supporting members. Of course, AMOCO Federal Credit Union, Enlightenment Enterprises, the Linwood Group, and Quality Precision Coatings. And so here today on August the 13th, we're at our Let's Talk Business podcast, and our special guest of the day is AMOCO, AMOCO Federal Credit Union, a member-owned cooperative organization. Look at me.
Perfect. You got it down now.
Okay.
You have it down now, Ms. Bobby.
Okay. And so we have our returning guest, Mr. Javian Jackson, who is a communications and culture specialist. And we also have first timer here with us today, Mr. Eddie Bonilla. Did I say it right?
That's
Bonilla.
perfect.
Who is Eddie Bonilla Sr., who is the vice president of Lennding. And we're gonna talk about this lending thing and this mortgage thing, and I'm sure our listeners and our viewers are going to be very, very interested in our topic. First off, we would like to thank our supporters, of course, as I mentioned earlier, AMOCO Federal Credit Union, Enlightenment Enterprises, the Linwood Group, and Quality Precision Coatings. And so we're gonna just jump right in with our guest. And I would first like to introduce you to Mr. Eddie Bonilla, and then Javian, of course, who is a regular. We call him JV. And so to get started, just tell us a little bit about yourself and
Sure.
what you do, and then Javian, you can comment on that.
Sure, absolutely. Well, I've been with AMOCO for 2 years now.
Okay.
Actually been in the credit union industry for about 18 years though. So served many different roles. I actually started as a part-time teller, and now am the senior vice president of lending at AMOCO. So
Oh, wow.
been a long road. Served in a lot of different roles and learned quite a bit through the years. But really, what I'm passionate about is lending. I enjoy helping our members, with their financial picture, getting it in better shape, and particularly with lending. And what I oversee now is consumer and real estate lending. So anything from a credit card, personal loan, auto loan, to a mortgage loan really falls under my umbrella. And we have a really strong strategic focus, especially on mortgage and real estate. So I'm excited to talk to you about that today.
Okay, good deal, good deal.
Awesome.
Okay, JV, take it away.
Good morning, everyone. I am Javian Jackson with AMOCO Federal Credit Union. It's a pleasure to be here with you all again, and I am coaching communications specialist, developing our relationships and maintaining our partnerships with organizations within Galveston County and beyond. And it's been a pleasure to be able to support, because we were also able to connect this past weekend with
Yes.
sisters, empowering sisters,
Yes.
supporting their movement with Galveston County students in our area. So we encourage the youth to strive to reach the moon. And you guys have done an awesome job at doing that, and I was also able to experience that.
Yes.
So it's a great pleasure for doing that with you all as well.
Yes, absolutely. And I would like to publicly thank AMOCO Federal Credit Union for sponsoring our Sisters Empowering Sisters scholarship program this year. And AMOCO has supported us from day one, and we were because of their partnership with us and some others who also made donations sold into our children. We were able to donate $8,000 to send our children on to college, and we're super excited about that. And of course, we thank you guys. We thank you so very much.
It was a good opportunity, especially seeing the reaction of the parents.
Yes.
Seeing to be able to see their kids receive additional support
Yes.
from
Yes.
those in our community.
Yes.
So it just lets them know that their hard work paid off,
That's
in
right.
high school.
That's right.
In high school, so that's exciting.
Yes, we
It
had
really
some. We had one of the students who not only received her high school diploma, but she also received her associate's degree.
Wow, that's amazing.
And she was an honor student. She graduated collegiate high school with honors, and so she goes into Prairie View A&M University as a nursing student, but as a sophomore. I mean,
Wow.
just smart as a whip, and so we're looking forward to seeing the great things that are coming from all of our awardees, in the future, and we're just so glad to be able to be that vessel that could, support them in their educational endeavors.
Yes,
So
ma'am.
yes, absolutely.
Yeah.
So, Mr. Eddie, tell us what is the first step in the home buying process. I want to buy my very first home. What would you say I need to do first?
Sure. Well, it's a great question.
Okay.
The home buying experience can be intimidating.
Okay.
It's the biggest purchase of your life
Right.
in many cases.
Right.
So it can be a little intimidating and scary. So I get it. We get that question a lot. What do I need to do to prepare to purchase my first home? There's lots of things you can do. First thing you need to do is kind of have an understanding of what your budget is. That's a big
Okay.
thing. What could you afford on a monthly basis to pay for a mortgage payment?
Okay.
If you have that in mind, the next step would be to apply with a lender, to apply with AMOCO actually. That's what
Okay.
you really want to do.
Okay.
And we're happy to walk you through the entire process. What we can do is lay out every product we have with your budget and your needs in mind. Obviously, we're going to find the right fit for you as far as the loan goes. The next question I usually get is, how much money do I have to put down? How much cash do I need to buy a home? We never get the question, how much can I put down? It's more, how much do I need to put down?
Okay.
So we do have lots of options available.
Okay.
And honestly, over the last 2 to 3 years, we've totally revamped our program to make sure we're serving the financial needs of our members on the mortgage side, where we do have available options for them for lower down payments, for no down payments,
Okay.
for no closing costs. We now offer FHA loans and VA loans, things like that. So we offer a full spectrum of loan products on the mortgage side.
Okay.
But to answer the question about the down payment, we have no money down options, all the way up to a conventional 5% down option.
Okay.
So yeah, absolutely. But the best thing to do is to really get an idea of your budget, your financial picture, what makes sense for you, and then meet with one of our loan officers. We can sit down with you and guide you through the process, really explain the cost involved with owning a home to make sure your income and your loan debt ratios, those type of things make sense. So we don't put you in a bad position when you own your first home. We want it to be comfortable for you. We want it to be fair, something that you have the ability to repay.
Yes.
That's our big focus.
Okay.
So we're happy to meet with our members or potential members and talk about those options. But that's really the first step. So you want to get pre-qualified. That's the biggest thing.
That was my next question.
Right.
Yeah.
So you want to know before you start shopping that I can actually do this. I can actually go out and buy a home.
Yes.
And I think that's a really good suggestion. One good thing that my wife and I did before we purchased our first home, we practiced putting that money to the side to assure that we were able to, make this particular home purchase with this amount.
Okay.
And by doing that, we said, okay, we were able to put X amount of money to the side. So how about if we go for a bigger mortgage loan? Because I think we can exceed what we've put to the side already. So practicing, what you're able to afford is a very important process, because you don't want to jump into something and then you get into it and be like, okay, I felt I was able to afford it, going into it, but going into long term, as life gets better, if I can say, you want to be confident that this is something you can maintain. And not only that, you also want to be able to say, if something happens, that we have this much money put aside, and that we can make these payments while we make adjustments to our lifestyle.
So you're speaking in terms of reserves, having some funds in reserves, right?
Right.
Okay. So when you talk about you and your wife preparing for the home loan process to take that step and and then shaving some things off,
Right.
removing some of those not necessities, those luxury kind of things. Was that difficult? Was that a difficult decision for you and your wife to make? And was it a decision that you guys made that it was still comfortable?
I think it was one of the best decisions that we made.
Okay.
It wasn't necessarily difficult because we were dedicated to
Yes.
what we wanted to do.
Yes.
So we went as far as getting rid of things such as cable. Like what do we not need that we're spending so much money on?
Yes.
How can we spend less money on our cell phone bills?
Okay.
You know, how can we spend less money on entertainment, going out? You know, to help us get to the that particular process. So in becoming knocking down some of the debt that we had, because you don't want to go into a mortgage loan with a lot of debt behind you. You want to go into your home comfortable, and you want to be able to pull into your home and be relaxed, not stressed that you have debt behind you, so much debt behind you, and and just you're working to pay just mortgage.
Yes.
You want to be able to live life during that beautiful process.
Yes, and enjoy it.
Yeah, one of the valuable things about working with a loan officer, one of our loan officers, is we'll sit down with you.
Okay.
We do take a look at your credit report, so we can see some of the liabilities you have, some of the commitments, auto loans, credit cards, those type of things. So we take a look at your income, and we compare it to those liabilities or those debts, and we say, okay, this is how much room you have on paper. This is what it shows. Let's talk about your budget as far as your other expenses, your household expenses. What are you comfortable with? So we try to show you what guidelines say works for you, but that may not be the case, like you're saying. It may be too tight for you. So we try to work with you to find out what that comfortable budget number is for a mortgage payment, and we help you build towards that and give you the options based on that. So it's a great point about sometimes you have to change your lifestyle, and to get in that first home, and you're counting on obviously things developing in your career and things like that, where it gets easier later. But absolutely.
So,
And it was clear. It was clear. I'm hearing you say, because you guys were committed to that. You saw bigger. You saw beyond comfortable right now to something greater. You know what I'm saying? And so because you were committed to it, that's how you were able to make it happen. As a married couple. And so and then when you get there, you can look back and you can appreciate how those sacrifices were so much worth it. In the end. And so
so we don't want to not include those who aren't married too, because I've helped individuals go through that process.
Okay.
Because it can be done.
Okay.
It's just because some people may have the income but not maintaining it to get to that process of buying their first home.
Okay.
So like I said, even an individual can accomplish these goals, and it's all through changing, living within your means.
Okay.
Absolutely.
Putting some things in
right.
order.
Yeah, just living within your means, and anything can be accomplished as an individual and as a married couple. So we have successful stories for both.
Okay.
Absolutely.
Good deal.
Yeah. Owning a home is an investment.
Yes.
It's much better to be paying towards your own home that you're going to own at some point, rather than paying rent. That's one of the things we try to compare with our members. It's better to build wealth that way. You build wealth faster if you own a home and you own that outright. So yeah, we'll work with you to find out what makes sense for you, but that pre-qualification is where you want to start. You want to make sure you got that letter from us saying you're good to go.
Okay.
You got a ticket to go shopping.
I love that shopping word.
And then we can actually help connect you with a realtor, in our communities that are trusted, that we've worked with, that can really make the buying process much smoother for you.
And like you said, Eddie, that I want to just say that pre-qualification letter is very important, you guys, because now the competition is there's competition out there, I can say, when it comes down to buying your first home. You're going to have multiple people looking at, your home, and without that pre-qualification letter, your process can be held back, a week or two. I've been through that experience before, finding that home that you like, and I didn't have that pre-qualification letter. You know, and during that process of getting that pre-qualification letter, someone has already taken that home that you are now interested in. So that pre-qualification letter is very important.
So the pre-qualification letter is more like your green light, right?
That's
Right.
correct. So we'll issue a pre-qualification letter once we've verified like your income and all the things that help you qualify for the loan. It means your credit approved, means your income approved.
Okay.
So it is a green light. And to be honest with you, most realtors now, especially in this market, like you're mentioning, is so competitive, they won't make an offer for you without that pre-qualification. Like, because the sellers want to see that.
Right.
Hey, this is a real offer. Financing's ready to go.
There it is.
So yeah, homes are not lasting very long nowadays.
On the market,
We're seeing some sell in a day or two.
Yes.
It's very competitive right now.
Yes. I have a friend who they put their house on the market like on a Monday, and they were already getting people coming by wanting to see. I mean, like that day, like the day that they put the house on the market, and she was just like blown away because she said, this house is going to sell this fast. They hadn't even gotten to the place of when the house sells, where are we going to go?
Right.
You know, and she said that she told her husband, well, we're going to have to get an apartment or something because the house was selling that fast, and they weren't ready for it. Eddie, talk a little bit about, I know that you have people that have everything that's perfect. You know, they have all their little ducks in a row, and it's just easy to just, for the process to just go, and they get the green light. So talk a little bit about credit worthiness and those people that may be facing challenges, even though there's some things that, talk about what they can do. Talk about that.
Sure, absolutely. It's a great question because a lot of people say, well, I can't buy a home. I don't have great credit, you know, and that may be true. But there are a lot of programs that we have that lend to lower credit score borrowers.
Okay.
Ultimately, it is about payment history, that type of thing. But we can definitely coach you on what to do to make your credit profile get to the point where you can qualify for a loan.
Okay.
But typically, you see Fannie Mae right now has a limit of credit score for 620 and above. And you can qualify for an FHA loan.
Okay.
For our members, we actually don't necessarily take credit score into account in totality. Like we take a look at your relationship with us, how you've paid with us, and obviously the ratios and your debt load and all those things are factors as well. But just because you have a lower score does not mean that we would not make a loan for you.
Okay.
So it's very important to know that. If you're in a relationship with a credit union, typically you have some more flexible options as well. The other thing to think about is, you know, your rate on a mortgage loan. Your rate is determined by your credit score in most cases.
Right.
So just because you qualify for that mortgage at a low credit score doesn't necessarily mean it's the most cost-effective way to buy a home. So what our loan officers can do is kind of coach you on things you can do to improve that score. Maybe it's paying down your credit card a certain amount, or consolidating debt to get your credit score higher because you don't have as much credit card debt, things like that. By doing that, your score goes up, which means your interest rate goes down. Right. And in the grand scheme of things, when you're talking about these big loans, it could be thousands and thousands of dollars, tens of thousands of dollars. So very important to understand that that as your credit score improves, so does your financing options. But it all comes down to you know, making sure you have great payment history, and whether you start now, you know, maybe you had a tough history with that. We can work with you, say, okay, here are the main things. There may be a collection account here. If you pay this off or settle this account, it will improve your credit score, but also show that that debt is not lingering out there. So there are lots of things we can do to help you with that, but there are a wide array of options for, you know, borrowing options across the credit spectrum. So just because you don't have perfect credit does not mean that you don't qualify for a mortgage loan.
Okay.
I think, and it was a very important process for me because our AMOCO lending officers during my home buying process, you know, I qualify for a mortgage loan, but they gave me the opportunity. Hey, JV, don't jump right into it. You can better service yourself and save yourself some money by knocking down some debt, and over the next 3 to 6 months, you'll see your credit score increase, which is going to help you qualify for a lower interest rate. And that right there, that 6 months to almost 7, 8 months was very important, because I was able to, like I said, get that high credit score and increase my mortgage. So that saved me money to be less stressful when making a mortgage payment. So very important.
And I'm sure the 3 to 6 months, it goes by fast. I mean, time just goes by fast, and you're, again, I keep saying that you're looking at the whole bigger picture, because you're getting some things and putting some things in place so that your credit score will go up, your interest rate will go down, you know, and it's just a win-win situation. When you talk about numerous options, and those options for people who have less than perfect credit, what would you recommend for a family that is post-bankruptcy? You know,
Right.
they've come out of bankruptcy, they've been out of bankruptcy, let's just say 12 months, and they've seen their credit score go up, you
Right.
know, but what are the options for, what would you advise?
Sure. So typical guidelines for bankruptcies, you have to wait 3 years before
Okay.
you can be approved for a Fannie Mae approved, which is
Okay.
FHA type loan, those
Okay.
type of things. There are shorter instances with Fannie Mae that you can do that.
Okay.
The credit union does tend to stick to those guidelines,
Okay.
unless, like we talked about, you're a member that has a history with us. Like you can give us a letter of explanation explaining what happened. You know, was there a extenuating circumstance that caused it?
Mm-hmm.
What has changed since then?
Okay.
So a lot of our underwriting decisions are not necessarily based on in-the-box guidelines. We're going to look at the whole picture and try to make it work if it makes sense.
Okay.
But yeah, the bankruptcy thing is a challenge. Like it
Okay.
typically takes time. In Chapter 7, Chapter 11, there are different
Mm-hmm.
type of guidelines as well. So it does take some time to recover for that, but even still, we can kind of guide you along and say, okay, here's the path to get to a mortgage loan. Do these things, and in 6 months to 12 months, whatever that number is, we can get you approved.
And that's encouraging, because you know you have those instances where everything is perfect, you know, and then you have those instances where their situations are less than perfect. But to hear you say, and for our viewers and our listeners, all is not lost. You can still get to where you're trying to go. You know, there are going to be some things that you're going to have to put in place and change some practices, but it's still possible.
Right.
You know, and that is really great to hear, because you can't be coming out of this thing and you're getting everything back together and feel like there's no hope for me.
Absolutely. You know, people make mistakes,
Yes.
and decisions have consequences
And life
financially.
happens.
And life
Yes,
happens. You get
yes.
put in bad positions.
Yes.
And it's just, like you said, it's just life.
Yeah.
But it's not the end of the road.
Yes.
It doesn't mean you can't ever own a home again. There is a path, and we
Yes.
can help you discover that by really just taking a look at your whole financial picture and you know, like I said, give you those step-by-step process on what to do next. So down the road, you can get back into that home ownership
Yes.
game.
Yes.
So.
Great.
Good deal.
Good to know. Good to know. Tell us, Eddie, what cost should be expected when buying a home?
Yeah, it's a great question. Everybody hears that closing cost topic, and
Yes.
it's like, well, how many thousands of dollars is that? So typically it is, depending on your loan amount and that type of thing. But the biggest part of it is the down payment, kind of what we talked about.
Okay.
A conventional mortgage requires at least 5% down. So you take your loan amount or the sales price, multiply that by 5%. That's the cash out you have to start with. So that it's a big chunk for especially for a bigger or a larger price home. It's going to be a lot of money. But that's why we also have options for zero down, especially for some of our borrowers that this is their first time purchase, you know, first time home buyer kind of thing. It's kind of our own product or program that we've created to help help those members that need some help with that down payment assistance or closing cost assistance. So, yeah, 5% is conventional. That's typically what's required. FHA requires 3.5%, which is a little bit less, and then we also have the 0% that we offer at the credit union, and that's a portfolio product. So that's not a Fannie Mae thing or anything like that. I think it's important to note that at AMOCO, we portfolio all of our mortgage loans except for FHA loans. FHA loans, you'll deal with us. We'll get your loan going, get it done, but it is a Fannie Mae loan in the end. So it's important to know that, but it is an option that we have for members. Like if that's what you need to qualify, we can certainly provide that product for you.
So am I understanding you to say that is, I'll say an amenity? Am I understanding you to say that is an amenity that is customized by AMOCO for its members?
Correct. Yeah. So it's basically we are the point of contact for FHA.
Okay.
FHA loans. We just follow their guidelines, and typically their guidelines allow more borrowers with lower credit scores to qualify for their loans. There is a lot of assistance there.
Okay.
But in the end, we do the whole process, get you to closing, get you your keys, but that loan is not actually in-house with the credit union because it's Fannie Mae sponsored. So we do have plans to change that in the future and partner with Fannie Mae directly to do that, but right now we do not. But I can tell you this, the majority, I can say this year, we've probably only done a handful of FHA loans, and that's because our other products make up for that.
Because
We
they're
have-
better.
They're better.
Let's just call it what it is, because they're better.
They're more cost effective, and it's just better when we have your loan in-house. So we do our best to try to make that work for our members rather than going that route. And I think once you lay those products side by side and you see the option, even if it requires a little bit more down payment, if you look at the terms in the long run over the term of the loan, you'll see that our products are more cost effective and more affordable for you. So.
Okay. You mentioned portfolio.
Right.
Talk a little bit about that for those
Good
of us
question.
that we don't know what that is.
Yeah, absolutely. So many of us have had the experience where you got your first loan, maybe with a big bank, and then you get some notice in the mail saying, hey, your loan has been sold to another bank, another investor. Well, at AMOCO, we are the investor.
Whoa.
So your loan will not be sold.
Whoa.
You make your payments with us. We service your loan. If you have problems with your loan, you come directly to us, and we deal with you one-on-one. It's not a third party. Everything is in-house. So that's what portfolio means. It means that we are the investor. No other lender has interest in your loan, our loan. It stays with us at AMOCO.
That's big.
That's huge.
It is.
That is huge, because you hear it all the time.
Right.
You know, my daughter bought a house a few years ago, and she says her loan was sold like 3 times within,
Absolutely.
you know, within the 2 years that she had purchased her first home. You know, so that's huge.
Yeah, we hear horror stories, you know,
Mhm.
for members, and even myself, just like your daughter. My first home got sold 3 times.
Okay.
So I'd have to change how I made my payments.
Mhm.
At one point, my escrow account for my taxes and insurance got messed up, and you know they reported it wrong and all this. So
Yeah.
there's some challenges there when you don't know who your investor is or
That's
your
right.
lender is. So there's a lot of value in knowing that your loan is with AMOCO and it's staying with AMOCO.
Yeah, that's another way to live comfortable in your home, knowing
That's
that that you're making the payment to one company
Forever.
for everything.
Let's just say for the life of the loan. You know that it's going to be right there. That is pretty amazing.
It gives you comfort, everybody.
Yes, it does.
A peace of mind.
Yes,
Absolutely.
peace of mind, and that's that AMOCO thing. You know, it's what you guys do, and you know, you are who you say you are, and you do what you say you do. You know, a member-owned cooperative organization, and so in my short time with AMOCO, I've just learned that it's all about the member. It is all about the member first and foremost, you know, and so that is good to know. That is really good to know.
Yeah, we're trying to build lifelong members. You know, We want to serve your financial needs in every area, whether it's a checking account, savings account, mortgage loan, everything. So we try to make our products attractive, and we give back on those products because we know that's important to our members. There's one other feature I'd like to mention, especially when we're kind of in this refinance market where rates are lower, that kind of thing. All of our mortgage products have a modification type feature to them, where instead of having to refi with another lender to get a lower rate, or maybe shorten your term, or maybe you want to make a big principal payment and readjust your loan.
Okay.
You don't have to go through the whole closing costs and all that all over again. We offer a streamlined modification process where we'll adjust your rate based on your current credit score, and then also adjust your term if that's what you want. So we make it very simple, and it's very simple because we don't want your loan going anywhere else. We want you to stay with us at AMOCO. So it is a good feature to have, to know, like for instance, if you start with a loan that maybe is a higher rate because of your situation.
Okay, give us an example where it's a AMOCO loan initially.
Sure.
Okay.
Yeah. So let's say Mr. Javian has a mortgage with us.
Okay.
Maybe it was several years back. Maybe at a rate 5%.
Okay.
Right now, the rates are 3-ish%, 3.5% for a conventional mortgage. He can come to us and say, hey, I'm wanting to refinance my home. I don't want any cash out. I just want a better rate in term. I want to shorten my term so I can pay it off sooner.
Okay.
In many cases, we can shorten your term and lower your rate, and your payment will not change drastically because of the rate being better.
Shorten your term and lower your rate.
Correct.
So for those who aren't familiar with that process, so pretty much what Eddie is saying is that you guys would have the opportunity to, say for instance, if you started off with a 30-year mortgage, by refinancing, lowering that rate, that 30-year term can now turn into a 20-year term or a 15-year term. So you're paying less money on your mortgage and also lowering that term that you're paying that loan.
You did a much better job. You should work in the mortgage department.
Well, I wanted to break that down because, like I said, I too was a first-time home buyer, and I was in that same seat saying, okay, what is a term?
Right.
Break all that. So I'm giving you guys the breakdown from the fanciness of Mr. Eddie said.
You did a much better job. Thank you for clearing that
Eddie
up.
said you did a much better job. So Eddie, am I understanding that when you say lower the life of the term, the life of the loan, and as well as the note itself, it could be lowered as much as from a 30-year loan to 15?
Well, it just depends. It depends on where you're at with the loan.
Right.
If you've paid for 5-7 years, that's typically, and you only really have 20 years or so left.
Right.
And you're like, well, I want to knock off another 7 years. I'm just going to restructure my loan to a 15-year term. And what I'm saying is, right now rates are so low that by doing that modification, it'll lower your rate and really make up for that cost or that difference in your payment. So you don't really experience a higher payment for getting rid of that term. So it's just kind of how the rate environment is right now. We see members taking advantage of that. But back to the feature is, the point is, during your loan life with AMOCO, you do have that option to say, hey, my interest rate's a lot higher than what market is right now. And we'll say, yes, we'll absolutely just modify your loan without you having to go through a full closing process, paying closing costs, all of that. So we're very flexible with that. We charge just a minimal fee to cover like document preparation from our attorneys to get that done, and that's it. So many members think, I need to refinance. I'm not happy with my rate. I need to go look elsewhere. Well, that's not the case. We can actually do that for you in-house. Keep your loan here, keep everything the same. We're servicing your loan, but we can make your loan better, just like that. So
that's like a specialty feature.
absolutely.
You know what I'm saying? Because I'm as we spoke earlier, I am a notary signing agent. Okay, and so I do the refis, you know, and for you to say, it's just, this aha moment for me, because when I refinance people's homes for them, it's not like what you're talking about.
Right.
I have never seen that.
Right, it's a stack of papers. It's
Yes.
going through a whole other loan process.
Sometimes it could be 200 pages,
Right.
Eddie.
Right. Yeah, our modification process is maybe 4 to 5 pages, and we schedule a time for you to come in branch, and we do it ourselves. We file it, update your loan, it's good to go. It's that simple. So all that's just an effort to say, you know, once you are an AMOCO mortgage holder, we want you to be one for life. Like, if you're not happy with, or the market says that I should be getting a better rate, we're willing to adjust that for you to keep your business.
Okay, so what about a person or a family that bought their first home and it wasn't financed through you, but now they want to come, they want to come over to the better
Sure,
side.
absolutely.
You know, do you guys see that a lot?
Over the last year, especially at the onset of the pandemic, where the rate environment for mortgage loans went to historic lows, really did. It pushed us into one of the biggest refinance booms we've ever seen. And so, yes, that's basically what we've seen like crazy over the last year and a half or so. And honestly, some of those processing times have been pushed back, but it's not just us, it's every lender, just because of the rate environment. So it's a great time to refinance. Absolutely, it's the perfect time to look at your mortgage situation. You know, you could potentially save hundreds of dollars by just doing a refinance. So yeah, we do have those options. We do them every day. And we roll in closing costs, try to, you know, so you don't have to have cash out of your pocket to get it done. There are lots of options we can look at for you, but ultimately, yes, that's most of our business right now. We are starting to see a shift. We're starting to see more purchase loans come in. People are buying homes, even though the inventory is crazy low right now in our market. So it's a mix, but yes, refinance over the last year and a half has been just crazy busy, to be honest with you.
And that's a great problem to have
Yes,
for institutions, right?
Absolutely.
Lending institutions. And so if you're listening today, this is some really great information. If you're in the market to refinance your home, we're very much still in a pandemic, but now is the time. Now is definitely the time to look into that. And so by all means, you'll want to connect with AMOCO, Federal Credit Union, to look into, talk to their lenders, talk to their team over there at AMOCO to see what they can make happen for you. And I hope you were aware of their customized services that only they offer in-house. Great stuff. Great stuff. So we're going to take a break from our questions, and I just want to talk a little bit about Tri-County Regional Black Chamber of Commerce. If you are new in business, if you are seasoned in business, and you need some guidance with your business, you're looking for a mentor, a business coaching, check us out. Look at us on our website at tcbcc.org. That's tcbcc.org. And once you're there, you will learn that we are one Chamber of Commerce, and we serve 4 regions and 12 counties. Region 1 is Harris, Montgomery, and Liberty counties. Region 2 is Galveston, Brazuria, and Fort Bend County. Region 3 is Chambers, Jefferson, and Orange. And Region 4 is Jasper, Newton, and Hardin. And once you go to our website, which is very user-friendly, I always tell people to click on our services tab and our testimonials tabs. And of course, our services tabs will show you the services that we offer, and our testimonials tabs will give you real live testimonies. I call them our testimonies. It is called our testimonies, but it's more like our reviews, because it gives you insight to those business owners who have, as a result, seen great things happen in their business as a result of being members of our chamber. And so when you go in and look at that, you'll also see when we talk about our services tabs. We also have a construction and a truckers alliance. So if you're in the construction industry, if you're in the trucking industry, which we all know is booming right now, just like refinancing, the trucking industry is booming right now. So go to our website at tcbcc.org and check us out. I mentioned to you earlier about our the regions and the counties that we serve. We are one chamber and we serve 12 counties, and that is huge. That is huge because it just lets you know how far our reach is, and we are growing. And I would also like to say that our mission, we are committed to acquiring and disseminating valuable business information, resources, and tools for our members to achieve entrepreneurial parity and economic prosperity in the region. So we're committed to making your business better, making your business grow, for the prosperity and the parity of your business in the region and international. Also, if you're looking to grow your business as far as exposure, media exposure, please check out GMT Radio at www.gmtradio.com. Mr. Nice, we call him Nice. His name is Mr. Kenji Johnson. We're in the studio right now. He is an expert in this whole media madness thing. So if you're looking to do commercials, if you're looking to do videography, Nice is he's the one. He can get you out there and get you the exposure that you need. So be sure to check him out. Okay, so that's my spiel on our sponsors and that stuff.
Good deal, good information.
Yeah,
Absolutely.
good stuff. Good stuff.
information.
Yes. So, my next question is, Eddie? Tell us, what is a home equity loan?
Okay, well, that's a very popular question
Okay,
right now.
okay.
Like you were mentioning, we're still very much in this pandemic
Mhm,
environment.
Mm-hmm.
A lot of our members have used it as, I guess, motivation to make their homes their dream home.
Okay.
Since we can't necessarily be out and about like we used to, or
Right.
there are some restrictions. Members are wanting to build a pool. They're
Okay,
wanting to make those renovations to their kitchen, to bathrooms.
Okay.
Maybe it's the backyard oasis that they've always wanted.
Okay.
So home equity loan is just a great way that you can use the equity in your home to get cash out and then make those type of improvements. And really, you can use those funds for just about whatever you want to.
Okay.
But we see a lot of members doing that, whether it's, like I mentioned, some of those improvements, building a pool, improvements around the house. Maybe it's after this freeze, you had a bad experience with
Yes.
that, and you had to make a lot of repairs.
Yes.
Maybe you depleted your savings account because you needed to cover those type of things.
Okay.
Well, home equity loan, you could pull that cash out, kind of restore what you used.
Okay.
So yeah, that's exactly what it's used for. In Texas, the Texas Constitution actually allows for you to borrow up to 80% of your home's value to pull out cash up to that point. So if your home is worth $100,000,
Okay.
you owe $50,000. You have an additional $30,000 that you could pull out in cash. So there is a little bit of math and some regulations
Mhm.
and rules that we have to follow, but you can go up to that 80% mark to pull cash out of your home.
Wow.
Yeah. So, like I said, it's a very popular product right now. In fact, most of the refinances we're seeing right now are cash out type refinances because they are doing those type of things. We also see it to consolidate debt. We have some members that, this whole pandemic thing has hit hard.
Yes. Very much so.
Losing jobs or out of work for a period of time. It's put stress on the financial picture. Consolidating debt is another great option. You can pull out cash from your home, pay off credit cards. We've had members pay off vehicles just because they wanted one payment.
Mm-hmm.
And right now with the lower rate environment, you can get a better rate for all of that together. So it's a great option if you need some flexibility with kind of restructuring some of your debt. But also making that home the home of your dreams. It's a great time to do that. unfortunately, the price of lumber and things like that have gone up and kind of
Yes.
made that a little trickier.
Yes.
We've definitely seen pole prices increase, but it's a great option to borrow at a low interest rate. It's more cost effective to do it that way. We have options. You can do it all together with your first mortgage, or we can combine everything. And we also have a second lien option to where I just want to leave my first mortgage alone. I want to pay this separately. Well, we call that a second lien home equity loan. So it's a separate loan from your I guess your first mortgage. So there's two different ways you can handle that, but we have options for both.
Good deal. We've learned something right there, right?
Yes,
So instead
yes.
of going into your savings account, you definitely can take out equity into your home, from your home,
Absolutely.
to make those nice purchases to upgrade your home.
In the home buying process, what would you say time-wise from when you initially get the process started to the signing on the dotted line? What's
Sure.
that like?
Yeah, so buying a home right now, our average closing time is what we call it for purchases last month was just over 30 days.
Okay.
So it doesn't take long. Refinances tend to take a little bit longer just because it's just the nature of it. You know, it takes a little bit longer to gather documents and get the appraisal ordered if needed, things like that. But yeah, it's actually pretty quick. It's not much different than what it has been over the last several years.
Okay.
So right now, about 30 days. And typically you see realtors write contracts for closing dates, usually right now about 45 days. So we're well within that traditional period to purchase a home. Refinances tend to take about 45 days right now.
Okay.
Awesome.
Okay. So share with our listening audience and our viewers, Eddie, your recommendations for a family who, excuse me, JV, not just married people, but single people also that are looking to buy their first home. What would you share with them? What would you tell them? Like, they know nothing. They're totally
Right.
green, and of course there is some apprehension,
Sure.
you know, and they're just a little afraid. What would you tell them starting out?
Right, absolutely. Well, the first thing, you just kind of need to evaluate your financial picture. You know, what do things look like? How much do you have available to invest in this home in the form of a down payment, covering closing costs? And credit's the other big thing. Where are you at with your credit? Ultimately, that tends to be the big kicker for many borrowers. They need to work on that, or they're ready to go now. There's several ways you can do that. One is simply by just contacting one of our loan officers.
Okay.
We can start that process for you, review it. We go through your credit with you line by line and tell you where there may be any red flags or areas of improvement that are needed for you to qualify. You can actually do this on your own as well. Through our mobile banking and digital banking solution, we have a new solution out there that members can use called Credit IQ.
Okay.
So they can actually opt into a service where it'll actually update them on their credit score on a monthly basis. So you can log into your mobile banking, online banking, you can click on that credit score tab, and it's going to show you where your credit score is on a little meter, tell you how much it's changed, what looks good, what areas you can focus on. But when you talk to one of our loan officers, we can certainly guide you on how it looks now. This is what you would qualify for, this is what you need to do. That's really the heart of getting started. It starts with you. You have to know what you can afford. You know, are you stable? You know, do you feel like this is the time to do that? We can help you with the technical side of it, the numbers, to make sure what you think your budget is actually makes sense on paper, and that is conforming to guidelines for mortgage lending.
Yeah, because I'm familiar
Awesome.
with the Credit IQ. Of course, I'm a member of AMOCO Federal Credit Union.
We thank you.
Yeah, okay. And I'm a member owned, you know, and so it's like a report card. When you
Absolutely.
click on it, you know, it shows you your credit score, and then it tells you, like, you get an A for this, and a B for this, you know, and it tells you those areas. Well, it shows you those areas where you need to improve. If it's like a C, you know, you may have, I think it's like maybe 5 categories or something. And then if there are some areas that are where you have all these A's, there may be an area where you have a C, you know, and so it kind of just leads you to what you need to do to clean up or,
Absolutely.
you know, work on.
The biggest thing I can share with someone who's wanting to buy a home is it's never too early to start working on those things. So even if you don't want to buy until 4 or 5 years later,
Okay.
you still need to know where you stand on that stuff if you ultimately have that goal. Because the more you improve that credit score in your financial picture, the money you can put down, if you're saving towards that, the better loan you're going to get. It's going to be cheaper for you in the long run, more cost effective. You'll have much better offers if you have those things in place. So.
Yeah, and I think that's really valuable. That's a really valuable nugget, because if, as you mentioned, if you don't think you're ready for 4 or 5 years, well, you can see where you are right now.
Absolutely.
So that 4 or 5 years down the road, it's just a breeze.
Yeah, and we do that quite often. We have members that we've spoken to 2 years ago, 3
Okay.
years ago, and they come back to us and say, "Hey, I did everything you told us to do.
I'm ready."
And sure enough, I'm like, "Great job, you are ready. Here's your
Wow.
pre-approval letter."
Preparation is key.
Yes.
It can be a beautiful process, especially when you believe into it.
Yes, yes, yes. And
That's
even
awesome.
it's you know, it's win-win, because if you're ready to go right now, we can help you, and if there's some things that you need to do to get ready, we can help you, you know. And so I love that part. I love that part of it, and it ultimately winds down to we can help you, no matter what. We can help you.
Right. We're not going to turn you away without putting you on a good path. I can tell you that much. We may not have the answer you want right now, but we can tell you how to get there and what to focus on moving forward. So we take great pride in that, and that's part of our mission.
That's right.
That's part of serving the financial needs of our members. So we take it very seriously.
Wow. Thank you so much, Eddie, for coming and sharing that information, and JV, of course, for always being here with us.
Thank you for having us.
It was an honor. Thank you very much.
Yes, and it has been some great information. So we're going to get ready to close out. It's been a great hour. It's been time well spent. See how fast that was? See how?
Very quick.
And it's been time well spent. So by all means, if you're in the market for a new home, if you are in the market for a refinance, if you're in the market to do some home equity stuff, you know, you want to get that fabulous kitchen, you want to get that wonderful backyard to make it look like you're in Hawaii, you know, the oasis, as Eddie said, you know, if you want to knock out a wall and enlarge your bathroom, you know, or something like that, now is the time. So by all means, you definitely want to reach out to AMOCO Federal Credit Union, and that's, you can reach them at amocofederalcreditunion.com.
.org.
amocofederalcreditunion.org, or just pick up the phone. What I love about AMOCO is you're going to talk to a voice. They have state-of-the-art. They are a state-of-the-art credit union. I was just so impressed with their, what's it called?
Video
Jamie?
banking.
The video banking. Oh man, it was. I was just like in a studio. It was almost like being in the studio, you know. And this person just comes up on this screen, and I was just like, oh, you know. So please, by all means, check them out. We're gonna close out. Thank you for joining us today. It has been a great opportunity and time well spent. And we will see you next week. We're gonna sign out. Thank you for coming, and we shall see you. We'll see you next week. And Eddie, thank you for coming. It's been
Absolutely.
great.
Thank you for having me.
All right.